My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate, to teach you. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. President Trump, what took you so long? You know, this man went almost 100 days before he finally said he'd like to see Fed Chief Jay Powell ousted for keeping interest rates too high. I thought he would have done it weeks ago. Of course, it's illegal for him to fire Powell, as the Fed's an independent agency. But it certainly sounds like the White House wants more control over the Federal Reserve. I guess this was expected because it didn't really have much of an impact on the stock market. Dow sinking 527 points. Hey, that was a huge chunk of it explained by a shortfall from United Health. While the S&P advanced 0.13% and the Nasdaq declined 0.13%. The fact is, the president wants lower interest rates to help offset the pain from higher prices that are going to be caused by the tariffs. But higher prices represent inflation. The Federal Reserve never cuts rates when inflation's out of control, which it very well could be once the tariffs are all in. I think the Fed chief wants to find out if that's going to happen. I like Powell. You know that. I think he's generally done a good job. Good public servant. Unfortunately, right now he's stuck between a rock and a hard place. Now, history says he should be doing exactly what he's doing. But history is now in the eye of the beholder. And there's only one beholder in this whole country. And it ain't Jay Powell. Hey, with that in mind, that's about as political as I want to get. Believe me, I'm getting real tired of this political stuff. With that in mind, let's talk about the game plan for next week. Good, we're talking stocks. That's what I like. Now, we're getting right into the thick of earnings season, and that means snap judgments washing overlaid on Wall Street, the roar of the grease paint, the smell of the crowd. Yeah, it's still that kind of weak, and when I look at it, it's very daunting, frankly. I'm canceling everything I'm doing every night next week and the week after, because you can't do a good job if you're me. Now, it all starts with the banks, specifically two really incredibly boring banks, Comerica and Zions Bancorp. Now, both are considered suspect. They have high yields. You can tell that. But the banks have been outstanding in this environment. No tariff exposure, low charge-off, decent loan growth, and hopefully some boost from deregulation down the road, which is what a lot of people voted for President Trump for, okay? Now, to me, though, the bank to own is on Tuesday. That's Capital One, which you probably know from the credit cards. Capital One is the last resort credit card for people who have a hard time getting credit. They've mastered the business of lending to the less creditworthy, and now they're trying to acquire Discover Financial, a competitor that also owns a payment group. Now, we own this one for the trust, and I can't wait for this deal to close. Talk about deregulation, please, because Capital One plus Discover could put up a real fight against many of the credit card companies, traditional banks, but also Visa and MasterCard. One relative bright spot in this market has been aerospace. And airplane engine maker GE Aerospace reports they had great gross margins last time. They report Tuesday. This has been a huge winner since the old General Electric started its breakup over 2 years ago. That's Larry Culp's been engineering that, and he runs GE Aerospace. This is one of the largest backlogs in the business, tremendous visibility into its outlook. We don't see any reason why that changes now. They have a terrific business that is just in repair and remodel. I've been liking the defense stocks lately because if our trading partners want better treatment from the Trump administration, the traditional go-to move is to go buy some planes and go buy some military hardware. Northrop Grumman, RTX, and Lockheed Martin all report on Tuesday morning. I think each one can be bought, but let me tell you something right now. RTX is the one that's the best of the lot. People love the soft goods today. They like Procter & Gamble and Colgate, right? I say take a look at Kimberly-Clark. It's really gotten its act together under CEO Mike Hsu. I don't think people realize that. They ought to. Now, no earnings season is complete without Tesla. Okay, it's kind of like Netflix. Yeah, great number, Netflix. No kidding. People keep talking about how Tesla needs to redefine itself as a technology company, replete with life-size robots and a game plan for the national rollout of self-driving cars. Without that, this is just some struggling EV play. Elon Musk, bring on the humanoids. It's their time. Give them a break. Wednesday is a nightmare. It starts off with ATT, which I still think will have one more good quarter. After stumbling initially, it's now one of the strongest stocks in the entire market. Then we have pretty much the opposite with Boeing. Now, I want to own this stock because nothing cures a trade deficit faster than buying dozens of airplanes from Boeing. That's assuming most countries decide to play nice rather than antagonizing the White House. Just one problem. Boeing has a hard time making planes. So its cash flow is weaker than I'd like. But if they can cure it, you'll have a buy. I want to see the cash flow. I have told Jeff Marks that if the cash flow here is turning up, then you must own the stock of Boeing. Now, not that long ago, everyone was jazzed about the prospects of GE Vernova. That's the old General Electric power division. These days, it's essential to build out the electric power for the grid, which no longer has enough juice to fuel and cool all these data centers. Of course, the moment the data center stocks went out of style, GE Vernova got hit. It's still up nicely versus last year, but without a recognition that the data centers continue to be built, this stock could languish. People have cooled on the stock of Chipotle with the excuse that it's too expensive to give you the same huge same-store sales numbers that we used to have. I disagree. Have the critics even tried the new Chipotle Honey Chicken limited time only option? I think Chipotle could ignite here when it reports after close. I usually split it right in half, okay? When I do it at lunch, I save the rest for dinner. I ate the whole honey chicken. I shouldn't have done that. It made me too full for dinner. Okay, now here's an intriguing one. People are concerned about service now. All right. This is an enterprise software powerhouse, has too much government business at a time when DOGE doesn't like paying consultants, from what we can tell. That's one reason why the stock's down 27% for the year. Now, I am betting that CEO Bill McDermott, many people say best in the business, is going to prove these people wrong when ServiceNow reports after the bell. Matter of fact, I'm counting on the company to be able to do better than expected. All right. That's what I see. All right, anyway, one of the most reliable companies reports on Wednesday, and it's usually greeted with a burst higher. That's IBM. Ever since the spun off Kyndryl, the legacy business, this thing's been hunting as a consultant. They've been winning a lot of contracts, lucrative ones. I like that. I like the stock. Now, there's been an awful lot of talk about how much tech we sell into China, right? And when it comes to American-made technology, intellectual property, it doesn't get any better than Lam Research, the semiconductor capital equipment maker. Lam's so good, but it's already had to take a hit in the Chinese business. The government didn't like how much they were selling, kind of like what NVIDIA's doing. Wow, I told you about NVIDIA. What can I say? Will Lam be hit again? Look, our government's eviscerated Lam's China business once already. Can it do it again? It does whatever it wants, doesn't it? Now, we had a rotation into soft goods going on today, and I don't know if it's going to last. But if it does, then there is a chance that Procter & Gamble will, when it reports, blow the numbers away. By the way, they really benefit from the weaker dollar. I know all the buzzing heads say, listen, weaker dollar bad. But again, as I will emphasize almost every night, because they keep emphasizing it, it's good for our companies. We're going to hear from PepsiCo. That's going to be a tougher lift. They used to be recession resistant, but Procter's a lot of business in China. PepsiCo's got potato chips. They've become too expensive. The airlines, they've been a mixed blessing between Delta, bad, United, good, the weak and the strong, which is Southwest and which is American. I think they're in the Delta camp, but their stocks are cheap. They may not stay that way. After the close, we have a very compelling night. We get results from Alphabet, and I'm not sure how the core Google business can be doing if people are starting to use ChatGPT, Grok, Claude, and even Alphabet's own Gemini, although I use that last. There's too much cannibalism here. At the same time, the company was just dealt a severe legal defeat in its ability to handle both sides of the advertising business. Tonight, we have on the former Justice Department lawyer who originally brought the case to help figure out what this all means. I am sure Alphabet will tell us not to worry. They always tell us not to worry. When people tell you not to worry, what do? Exactly. All right, now here's what you need to know. You can't model the advertising gross margins in 2027 because of that lawsuit loss. So if you can't model 2027, then you can't model it. And now we discover why it sells at 16 times earnings, because it may be expensive. Next, T-Mobile. Listen to this. It's been roaring again. It's the most aggressive of the phone companies. Continues to have excellent deals to get an iPhone. Go to Costco if you want to. That's where I look really good deal, but you got to switch, of course, out of Verizon. Now, as long as Mike Sievert is as long as Mike Sievert is running the show at T-Mobile, T-Mobile's got it. Now, people want gold stock, right? I got one. I got the only one you need. It's an Agnico Eagle. It's the best. It has the highest quality ore, and mine's in North America, which last I looked is a lot safer than a lot of other places. On Friday, we have two recession-resistant stocks. And historically, they've done really well, Colgate and AbbVie. The last time Colgate reported, it was only fair to Midland. They don't do fair to Midland twice in a row, so that stock's going to do well. AbbVie stock is volatile, but when it reports, you typically see some really good numbers that send it back towards its 52-week high. I would buy the stock of AbbVie ahead of the quarter. I wish I owned it for the trust. I'm trying to figure out whether I should buy still one more drug stock for the trust. But God, we got a lot of drug stocks. Here's the bottom line. I know it's supposed to be a terrible time, right? I mean, like, woo, scary. But I don't know, the companies themselves, they keep delivering and delivering. And you know what? I don't think next week's going to be any different. Hey, why don't we go to Amy in California? Amy.
Hey, Jim. Thanks for taking my call today.
I'm glad you called. What's going on?
I have a question about Nike. I bought it 6 months ago. It's tanked ever since, and I'm worried about what's going to happen with the new tariffs with the imports and exports with China. What do I?
Well, I'll tell you, you got Elliott Hill there. He's an old hand. You have a 2.8% yield, but it is from China. It is China. The stock's still $82 billion. Maybe it shouldn't be $82 billion. I think the stock's going to do very little. We own Starbucks for the Charitable Trust, and a lot of people feel that's the same way, and I think Starbucks is a better company than Nike. So just understand that if it's got China in it, people just say, sell, sell, sell. And then there's nothing more to say. All right, markets are volatile, and there's a lot of political rhetoric to parse, and I can't stand that. But companies seem themselves keep delivering, and I like that. On Mad Money tonight, fresh off an antitrust loss for Google today, I'm getting to an expert read on the ruling with the guy who actually did the government side, Assistant Attorney General Jonathan Kidder. He's a former, though, and now he works for CNBC. Don't miss his take on the case. Plus, Abbott bucked the market trend today, ending in the green after, well, yesterday, but I'm writing about it today. I'm checking up on the healthcare stock to see if it has more growth ahead. And later, I'm sitting down with the CEO of Snap-on, an old friend of the show, to hear how businesses are bracing for future tariff impact and whether we still know how to make things in America. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.